This was another big one today. So we did MicroStrategy Mondays yesterday. The clip went viral for my channel anyways, for this little wee channel, went viral. People really enjoyed that one. But somebody also said in the same comments that we should be talking about Mara. We should be talking about Marathon. They're doing the same thing as MicroStrategy. Why don't we do Marathon Mondays? Well, here you go. You get some Marathon Tuesdays instead. And before I do this, let's take this down for a sec. Let's take this down. It's important to know MicroStrategy. If you're comparing, if you're thinking about investing some of your pension in MicroStrategy or Marathon, MicroStrategy is by far, even though you can get Marathon for cheaper, it's like $25 a share. MicroStrategy is much preferred, not even close. So that's the first thing. Marathon, they're miners. I do not invest in Bitcoin mining companies. Way too hard of an industry, way too tough of a business. It's tough. So they're doing the same kind of thing here. And the third thing is that Marathon came out earlier this year and announced that they're actually going to be diversifying and now mining Caspa, which was a huge red flag for me. So I do not like Marathon. I do not like talking about Marathon, but I think it is important to talk about this, because this just goes to show how much demand there is for this thing that MicroStrategy is doing. So it says Marathon's 2031 convertible debt note offering was oversubscribed and upsized from 805 million to 1 billion at 0% interest. 0% interest. So somebody's given Marathon $1 billion, 0% interest on that. 5 years ago, before MicroStrategy started doing this would have, if somebody would have done that, they would have been put into the mental institution that day. You're giving somebody $1 billion and taking 0 interest in return for that. You are officially mentally ill. You are a crazy person. You are checking into the mental institution today. But fast forward 5 years, and all of a sudden, not only do they get that, but they're oversubscribed by $200 million. So that just goes to show more than anything else how much demand there is for these big institutions, this big capital. They want some exposure to Bitcoin. And this is the best way they're doing it, the best way that they see fit, through convertible debt. 0% interest. That is so crazy to me. Even as a Bitcoiner, that is so crazy to me. And I think it was a couple of weeks ago on Rabbit Hole Recap, they were talking about, they might even start going, if the demand continues to increase like this, Sailor might actually get negative interest rates on this. I don't know if it's possible. I don't know if, so what that would look like, it would be, somebody wants to give Sailor $1 billion, and not only are they not going to get any interest back, they're actually going to pay to subscribe to that. They're going to pay to give Sailor money. And you have to remember, the reason why this makes sense is because they're able to convert that debt, that $1 billion, they're able to convert that into shares at a later date. So that's how excited and that's how much demand there is for this type of thing, for these big institutions, for this big capital, because they can't actually buy Bitcoin yet and hold it themselves. They have to do it through intermediaries like MicroStrategy and Marathon. So, I mean, that just goes to show how much demand there is for this. So the people calling this a Ponzi scheme or a pyramid scheme, it's not. It's just a vehicle that allows this big money to get exposure to Bitcoin in the best way that they see fit, which is convertible debt offerings through these public companies, through Mara, through MicroStrategy, through Semler. And it does not appear to be slowing down. It will eventually, yes. Once this big money can actually hold Bitcoin themselves, and they see the value in that, and they have a whole team of people to manage their Bitcoin, then there won't be any demand for this anymore. But I don't know when that's going to be. It could be 5 years. It could be 10 years. It could be 20 years. You have to remember how slow things work in these big pension funds and these big institutions. They have a lot of people to report to, and there's a lot of regulations on what they can and can't do. So crazy.